Hello students, welcome to BYJU'S IAS. Welcome to a session on economy this week, wherein we'll be discussing some of the very important articles that have appeared in various business related newspapers. For this particular video lecture, I'll be taking the articles from Business Line, Financial Express, Hindu, Business Standard, Live Mint. And the time period for which I'll be taking up these particular articles will be from 20th of December to 26th of December 2018. So let's begin with the articles. The first article is related to GST. Now all of us know that GST basically stands for Goods and Services Tax. It's one of the very major reform that has been implemented by Government of India, which has revolutionized the idea of an indirect taxes structure in case of India. Now this particular article basically relates to or discusses the idea of a one nation, one tax. Now please understand, the basic structure or the basic concept of a GST is what? Earlier, there were multiple indirect taxes with multiple names. The idea was to subsume all these particular taxes or merge all these particular indirect taxes into one indirect tax. That is the reason many of the times you will come across this particular punchline related to GST, that is one nation, one indirect tax and one market. Now, the present structure of GST is so that there are multiple tariff structures or multiple tariff slabs. For example, we have got 0% slab, we have got 5% slab, we have got 12% slab, we have got 18% slab, we also have a 28% slab. Apart from this, we also have 28% plus, we have got 3%, so on and so forth. But there are various experts who have been critical of this particular idea of a GST structure. As per their opinion, they're basically stating that the present GST structure looks like old wine in a new bottle. That is, earlier there were multiple indirect taxes with multiple names. And today there is one indirect tax with one name but different slabs. That is their argument. But having said so, understand this, there are certain practical difficulties with respect to having only one indirect tax. For example, let's say hypothetically, Government of India decides to write off all these particular slab structure and simply say, henceforth, all the goods and services which are covered under GST will be taxed at 12%. Again, just a hypothetical example. So many of you will have a question, why not have a one GST rate, which was recommended by the earlier Finance Commission, that is 13th Finance Commission basically said that only one rate of a GST, that is 12%. Now, what are the difficulties with respect to having only 12% as a GST rate? Primarily, if I reduce the GST tax rate on all these goods, which are luxury goods, sin goods, so on and so forth, one, the consumption is expected to increase, and second, most importantly, the Government of India will be losing a huge amount of revenues. Already we are worried that the GST revenue collection has not been up to the targeted level which was announced in the budget for this particular financial year. So on one side, the consumption of, let's say, sin goods will increase, and on the other side, the Government of India will start losing a huge amount of revenues, and third, there is expected inflation which could happen in the market. For a simple reason, if the GST rate is reduced, then basically the consumption or the demand for these kind of goods is expected to go up in the market. When the demand is going to increase, it is going to fuel inflation rate in the market. But on the other side, what are the positive points with relation to having only one tariff structure like this of 12%? The advantage will be, one, the filing will become very easy, or compliance with the GST will become very easy. As of now, let's say you are a manufacturer who is involved in manufacturing of a product X, and to manufacture this particular product X, you will consume, let's say, 10 raw materials. And all these particular 10 raw materials will fall, some of them will fall in 28%, some of them will fall in 18%, some of them will fall in 12%, so on and so forth. Now imagine the difficulty of filing the GST return from the perspective of this particular manufacturer. With a uniform GST rate, the compliance or the filing will become much easier. And that has been the viewpoint of the 13th Finance Commission. They have basically stated that a single rate of GST will make it very easy to implement the GST rates in case of India. And there are many countries, for example Singapore, which has got a single rate of a GST. And there are also other countries which have got a dual rate of GST, that is two different rates in case of GST. The best example is Canada itself. Now basically the idea in case of India, as per the recent proposal which is being discussed, is we will have one standard rate. Now what do you mean by standard rate? The standard rate is the rate under which a majority of the goods which are under the GST will be taxed. I'll repeat the statement. Standard rate is that rate under which majority of the goods which are under the ambit of GST will be taxed. Apart from the standard rate, we will also have 0%, we will also have 5%, and finally we will have a higher tax slab. Let's say, for example, 28%, which will be imposed on or which will be levied on sin goods or luxury goods. Now, what is the advantage of having this kind of a structure? On one side, some of the goods which are consumed by poor, majorly by poor, will be taxed at either 0% or 5%. And remaining majority of the goods will be taxed at a standard rate. And finally, those luxury goods will be, or sin goods will be taxed at a very high rate of GST. Now, please understand, in the very recently conducted discussion in case of the rationalization of GST structure, the Prime Minister has basically stated that in a country such as India, you cannot have a single rate of a GST on a Bata Chappal as well as a BMW car. Now, speaking from perspective of the income inequality which is present in case of India, this is a right methodology or a right approach of having a GST. So this is what has been proposed. And in this particular article, they basically discusses various issues related to a single rate of GST. Now, no doubt the other parties, especially led by Congress, have criticized the present government of India for having implemented this kind of a GST structure. They basically say that the compliance has become very difficult, the tax evasion is higher because of these different types of compliance issues, so on and so forth. No doubt these are to a certain extent true criticism. But having said so, the finance minister has also defended this kind of a GST structure. What he has basically stated is, earlier under the VAT system, the standard rate or effective standard rate was somewhere in the range of 31%. And there were multiple indirect taxes which were imposed by different states all throughout India. For example, a commodity such as mobile, the VAT which was imposed by different states before the implementation of GST was in the range of 5% to 14% all throughout India. And when the VAT rates will keep on varying, the market prices of these particular commodities will also keep on varying. That was the situation earlier when the VAT system was present. The finance minister says that the effective standard rate of a VAT was 31% before GST, and today with the implementation of GST, majority of the goods have been brought under the ambit of an 18% slab under GST, and the effective standard rate is much lesser than 31%. Now, apart from this, another issue that has been discussed in this particular article is the issue of a merger of a slab of 12% and 18%. Already the indicators have been given by the finance minister as well as the GST council that they are thinking of merging 12% as well as 18%. And the new slab rate could be, again I am emphasizing on the term, could be 15%. Now whether such kind of a rationalization will happen or not, you will have to wait and see. But essentially, this is the gist of discussion with respect to One Nation, One Tax article. The next article is related to the prompt corrective action. Before looking at the details which are given in the article, let's look at the basic points related to prompt corrective action. It's a set of guidelines or a framework which has been imposed by RBI on the banking sector in India. Basically, under the concept of PCA, if the banks fail to meet certain standards or parameters as defined under the guidelines, these will be kept under observation. And this particular guidelines will be based on three very important parameters. That is, one, it will be based on profitability of a bank. Second, very important parameter that will be considered will be NPS, non-performing assets. And the third one is CRAR or CAR, capital adequacy ratio. If a bank fails in meeting any of the guidelines or the parameters which are set up under three heads, these particular banks will be kept under observation, and this particular observation framework is nothing but prompt corrective action. Now basically, once a bank is classified under the prompt corrective action, RBI will implement or impose certain restrictions on these particular banks. These particular restrictions again will be under two classes. One will be mandatory restrictions and second, discretionary restrictions. For example, RBI may ask this particular bank not to do any kind of a lending in the market, not to give any kind of a loans to industries in the coming days. RBI may ask this particular bank to raise capital or the investor capital itself or the promoter capital itself, so on and so forth. There will be set of certain measures which will be implemented by RBI, which are basically under two heads, mandatory as well as discretionary restrictions. Now please understand, as of now, 11 public sector banks along with one private sector bank has been classified under the prompt corrective action. Now, over a period of time, the government of India has been asking RBI to release some of these particular banks out of the prompt corrective action, or else at least loosen certain guidelines with respect to how the banks are classified under the prompt corrective action. I'll give you one example. In case of India, whenever a bank reaches a certain level of NPAs or breaches a level of NPAs, it could be simply classified under the prompt corrective action or kept under the prompt corrective action. Now, please understand, under the global management practices or under the global practices, basically a bank will be kept under the prompt corrective action whenever they breach all the parameters which are kept under consideration. For example, if the global practice is implemented in case of India, a bank will be kept under PCA only when they fail to meet the level of profitability, when they breach the level of NPA, as well as they breach a lower ceiling of a capital adequacy ratio. Now, this has been demanded by various experts to reduce or to take out some of the banks which are already under the prompt corrective action for having failed to meet, let's say, the NPA target or for having failed to meet the capital adequacy ratio. The government of India has been asking RBI to relax certain guidelines so that these banks which are stuck in the prompt corrective action can come out of the prompt corrective action and resume the credit cycle in the Indian economy. Now, what is happening in case of Indian economy, which is discussed in this particular article, is this. On one side, 12 banks, or let's focus only on the public sector banks, which are 11 in number here under the prompt corrective action, which control 25% of the market in India or the banking market in India, are kept under the prompt corrective action. Now, on one side, there has been certain issues with the liquidity in the market, especially with the default of IL and FS, which has led to shortage of a credit in the market. And on the other side, these banks which control 1/4 of the banking market are kept under the prompt corrective action, which are under restriction with respect to lending in the market. And on the other side, the deposits which are collected by these particular public sector banks has increased in the last 1 year. So on one side, there is a huge collection of deposits. On the other side, these banks are not allowed to lend freely in the market. And on the third side, there is already a shortage of credit availability in the market. So basically what is being demanded by Government of India as well as various experts is to relax certain norms or to loosen certain guidelines with respect to identifying the banks and keeping them under the prompt corrective action so that these public sector banks can come out of a prompt corrective action, resume the lending activity in case of the Indian market. Since October, it has been found that within the banking credit itself, there is a shortage of around 1 lakh crore rupees. In simple terms, there is a higher demand for credit in the market, but the supply is becoming lesser and lesser. One of the reasons which has been cited is the prompt corrective action, which is putting restrictions on these particular banks, which are filled with the deposits as of now. So this is the basic point which is being discussed under this particular article. The next article is related to PMUY, which is a Yojana which has been launched by Government of India. Now please understand, before looking at the points given in the article, let's try and understand what is the role played by energy in case of the households. Now please understand, there is a concept of SDGs, Sustainable Development Goals. Now the document related to SDGs basically says that various countries will be achieving various parameters or goals which are set up under SDGs if they ensure that there is energy security. In case of India, there is a problem with respect to providing energy security for all the households. One example could be availability of electricity. Another example with relation to the energy security in case of India is availability of cooking gas. Now, Government of India through various schemes has targeted or has aimed to provide electricity for all the households in case of India. And on the other side, the Government of India also aims to provide the cooking gas through a particular Yojana, which is Pradhan Mantri Ujjwala Yojana. Now, what is the importance of providing the cooking gas to these particular households? As per the economic survey, it states that the children in these particular rural households spend more than 400 hours annually to collect, let's say, wood going through various parts in the villages, which will be further used for cooking purposes in the household. On one side, the children are forced or because of various situations will fail to go to the schools, rather they will end up collecting this particular wood for burning purposes and cooking purposes in the household. And on the other side, when this particular wood is burnt within the household, there is also a danger of having indoor pollution, which has led to serious health conditions or repercussions with respect to health. Now, with the launch of Pradhan Mantri Ujjwala Yojana, the government of India is not only aiming to provide cleaner cooking fuel for these households, the aim is also to ensure that the indoor pollution will come down and the impact on this particular pollution on the women of the household will also come down. For this, the government of India launched a scheme in the year 2016. Initially, the targeted number of beneficiaries under this particular scheme was 5 crore, whereas it has been increased further to 8 crore. Now, very recently, the government of India stated that every poor household will be provided with the subsidy for getting the LPG connection under this particular Yojana of Pradhan Mantri Ujjwala Yojana. Now, please understand, although I said that the objective is to provide cooking gas to the household, the government will not directly provide the cooking gas. What government ensures under this particular Yojana is a subsidy will be given to these particular identified beneficiaries. Using this particular subsidy amount, these households need to get the LPG connection. Before the introduction of this particular scheme, the LPG penetration in case of India was expected to be around 62%. With introduction of this particular scheme, the penetration has increased to 89.5%. This is one of the achievements which has been mentioned in this particular article. But apart from this, another issue of concern which has been raised in this particular article is the issue of subsidy outlay by Government of India. Now, please understand, whenever the LPG connection is provided to the households, especially in case of India, the LPG cylinders will be provided under two heads. One is subsidized cylinders and the other one is unsubsidized cylinders. In simple terms, each of the households which have got LPG connection will get certain number of cylinders at subsidized rates. And once they consume of all these particular subsidized cylinders, further if they want to consume the LPG cylinders, then they will be supplied the LPG cylinders at unsubsidized prices. Now, please understand, there is also a third type of a cylinder which is supplied for commercial purposes, which is at market prices. Now, what is the basic difference between all the three types of cylinders? In case of subsidized, the government of India will incur huge amount of a subsidy and ensure the cylinder is available for the households at a very cheaper rate. And in case of unsubsidized, the government will not consume the subsidy, it will be transferred on the shoulders of the beneficiary itself. And third, market prices, apart from not giving any kind of subsidy for this particular cylinder, there will be state taxes as well as the central taxes which will be levied on these kind of cylinders. That is the precise reason the market prices cylinders are supplied for commercial usage. Now, over a period of time, the concerns which have been raised by various experts with relation to these kind of schemes, that is a Pradhan Mantri Ujjwala Yojana, is that the subsidy outlay of Government of India will keep on increasing. For example, the numbers which have been given are here. In case of subsidized cylinders, the prices have increased, that is the price which is paid by the beneficiary has increased just by 5 rupees a cylinder in the last 1 year. Whereas whatever excess cost which is related to this kind of a cylinder is subsumed by Government of India. In simple terms, the subsidy is given by Government of India. Whereas in case of unsubsidized cylinder, the price has increased from 747 rupees a cylinder in December 2017 to 809 rupees in December 2018. So in simple terms, the subsidy given by Government of India is very huge in case of subsidized cylinders. And with implementation of a scheme such as Pradhan Mantri Ujjwala Yojana, the subsidy burden on the Government of India also has increased. The numbers which have been given in this particular article are in comparison to the first 2 quarters of a financial year 18 to the first 2 quarters of financial year 19. For financial year 18, the expenditure that was incurred by Government of India in the form of the subsidy on LPG was around 13,900 crore rupees, which has suddenly ballooned in a span of a year to more than 20,800 crore rupees. So basically you can see that the subsidy burden on Government of India has ballooned because of implementation of this kind of a scheme. But having said so, Please understand the government of India is taking various measures such as a direct benefit transfer to eliminate the duplication of beneficiaries, to ensure that the right beneficiary will get the subsidy. So on one side, the subsidy burden on the government might be increasing, but on the other side, the government of India is also ensuring that the subsidy will be given to the right beneficiaries under this particular scheme. The next article is related to logistics sector. Now please understand, one of the issues that has been plaguing the manufacturing sector as well as the export sector in case of India has been the very high cost related to logistics sector. In case of India, the logistics sector accounts for more than 14% of the cost of GDP. If I compare this particular number with the developed countries, there the logistics cost is somewhere in the range of 5% to 7%. Even in case of a competitor of India, for example Chinese market, the logistics costs there are in the range of around 8%. In simple terms, those manufacturing powerhouses around the global economy will have a very lower cost related to logistics. Whereas in case of India, though we are targeting to become one of the global manufacturing giants, the logistics costs are very high. Now to reduce this particular burden on the Indian economy, the government of India, especially in the last couple of years, has implemented a lot of reforms. For example, one reform, that is GST, it is expected to prune or to reduce the logistics cost to a huge extent. Second, the government of India also has given the infrastructure status to logistics. Third, the government also has set up a logistics division under the Ministry of Commerce. So basically a lot of reforms have been implemented by government of India in the last couple of years to aid the logistics sector. The article basically discusses two more very important reforms or the announcements of government of India, which will basically again add to the improvement in the logistics sector. These 2 points which have been discussed in the article are: one, the government of India has proposed a portal for the logistics sector, and second, the government of India has proposed a tool or a app which will be used to, one, identify certain issues or bottlenecks which are plaguing the logistics sector, and second, what reforms could be implemented in the logistics sector, and third, very important, the government has said that this app or tool can be used even to file complaints of corruption. For example, a truck is stopped at let's say a toll booth and the police asks for corruption or money to let the truck pass, then such kind of complaints can be filed through this particular tool or app. Coming to the first one, that is the portal which has been proposed by government of India. The government says this particular portal can be used for selling or buying the transportation services. What is the advantage? Let's assume I'm a manufacturer. I need to transport some of my commodities or goods from point A to point B. I can simply log on to this particular portal and try to find out which kind of a transportation service providers are present, what are the prices that they are quoting, and as per my needs, I will enter into a transaction with any of these particular service providers. So this particular portal will boost these kind of transaction or service provision. So these are the 2 points which are given in this particular article. The next article is related to recapitalization. Now it's a fact known to everyone that the Indian banking sector is in a lot of a mess. One of the issues that has been plaguing the performance of Indian banking sector has been the issue of a non-performing asset. And many of these particular public sector banks, as already mentioned, are kept under the prompt corrective action, which is making it very difficult for this particular banking sector to revive the credit cycle in case of Indian economy. One of the ways or one of the reforms that has been implemented by government of India to aid the financial health of the banking sector in case of the Indian economy is the issue of recapitalization. In the previous fiscal year, the government of India announced the plan of a recapitalization. Now please understand, the term recapitalization is a very generic term which basically means infusion of capital. The infusion of capital by government of India has been happening in case of India since decades. But very recently this has come into picture for a simple reason. The issue of NPAs has boomed post 2014 and has become one of the biggest menaces plaguing the banking sector. And to overcome this particular issue of NPAs, the government of India announced a biggest recapitalization package in the year 2017. under which basically Government of India targeted infusion of capital of around 2.1 lakh crore rupees into the banking sector. This particular package would be done under three heads. One was budgetary allocation, which is basically allocating funds for recapitalization for the banks in the financial year. Second one is through recapitalization bonds, and third one will be through market access. That is, the banks will approach the market, sell the shares, raise the money. For this particular financial year, initially the allocation that was done in the budgeting was around 42,000 crore rupees. Now, very recently, the Government of India stated that apart from infusing 42,000 crore rupees, an extra infusion of around 41,000 crore rupees will be done in this particular fiscal year itself. This takes the total amount of infusion done by Government of India to more than 1 lakh crore rupees in the last 1 year. And since 2015 and 16, when Government of India started a frequent infusion of capital into the banking sector, the total infusion done by Government of India has crossed more than 3 lakh crore rupees. Now, these are some of the facts which have been given in this particular article. What are the objectives with which the Government of India is recapitalizing these particular banks? As already mentioned, one of the objectives is to ensure the financial health of the banks will be maintained. Second, the menace of NPAs will be overcome over a period of time. And third, and very important, is that there has been certain issues with respect to availability of credit in the Indian market. And this particular credit availability has become very acute since the crisis has happened in the market because of IL&FS default. Now, to overcome this particular issue of credit availability, there is a need of banks entering in the market and issuing credit in the market. Now, to enter into the market, the banks need a stable balance sheet. Government of India, by infusing capital into this particular bank balance sheet, is trying to ensure that the credit availability will be there in the market. So, these are the objectives with which Government of India is conducting the recapitalization. But having said so, there are certain experts which have raised certain issues or concerns related to this kind of a recapitalization done by government. First, the experts say that if recapitalization was the only way out for these particular banks, then why did Government of India not announce this particular recapitalization package much earlier? Second, the way the recapitalization is being done, is it not the misuse of a taxpayer's money? That is, the banks took a decision to invest or issue the loans in the market. The decision has backfired. Now, why use the taxpayers' money to provide solace to the banks, which are the erring parties here? That is, they made a mistake of investing in such kind of a project or issuing loans to these kind of borrowers. Why use taxpayers' money? Is it not a bad policy of using good money behind bad decision making? Third, should Government of India keep on infusing capital into these particular banks, wherein the idea of a NPA will keep on recurring? The basic concept here is, the experts say that the idea of a recapitalization or providing recapitalization is a curative measure, because the government is providing capital after the NPAs have occurred. What experts basically say is that better than recapitalization, Government of India should implement certain measures which are preventive in nature. That is, ensure that the menace of NPA will be eliminated or will be brought to the lowest extent possible. These are some of the issues related to the concept of recapitalization. The next article is related to GST compensation. Now, please understand, earlier the states had their own indirect taxes, which they used to implement or levy and collect the indirect taxes, which formed a very important source of revenue for these particular states. Now, with implementation of GST, many of these indirect taxes have been subsumed under the concept of a GST. Hence, there was a concern with respect to the revenues or the revenue position for these particular states. To provide a way out for these particular states, the central government, before the implementation of GST, brought in a concept of providing compensation. That is GST compensation, under which logic was simple. The year 2015 and 16 will be taken as a base year. That is, the taxes collected, specifically indirect taxes here. The indirect taxes collected by the states in the year 2015 and 2016 will be taken as base, and we will assume that year on year, these taxes will increase by 14%. Let's take an example of a particular state, let's say X. If I presume that in the year 2015 and 2016, the indirect taxes collected by this particular state was 100 crore rupees, then by using this particular natural rate of increase of 14%, next financial year it is supposed to collect 114 crore rupees in the form of indirect taxes. Now what is the use of this kind of a calculation? Let's say with implementation of GST, the powers of imposing and collecting indirect taxes will be taken away from this particular X, now which will be decided by the GST Council. And for the year, just hypothetically 2017 and 2018, this particular state X, as per this calculation, was supposed to collect 130 crore rupees in the form of indirect taxes. But under the ambit of GST, this state has been given a tax revenue of only, let's say, 115 crore rupees. Then the government of India basically says whatever is the loss of revenue because of the implementation of GST will be paid by the government. And for paying this particular GST compensation, the government of India also has imposed a cess, that is on certain luxury goods above and over 28%, the government of India will impose cess. Whatever funds are collected or money is collected through this particular cess will be kept under the GST compensation cess fund, from which the states will be compensated for any revenue loss with implementation of GST. Now, another point is, can this compensation be paid till perpetuity? No. The government of India basically stated that for the first 5 years since the implementation of GST, the compensation will be paid. Now, this particular article says that the government of India is thinking of expanding this particular period of 5 years to 8 years. That is, as per the present provision, the states will be compensated for any kind of a revenue loss with implementation of a GST till the year 2022. That is, first 5 years, and the GST was implemented in the year 2017. 5-year time period will be till 2022. Now, what after 2022? As per the present provision, any kind of a revenue loss after 2022 will not be compensated by the central government. But this article basically states that the central government has asked the 15th Finance Commission to give certain framework or recommendation as to how to provide the compensation to these particular states till 2025. That is a time period till where the recommendation of a 15th Finance Commission will also be in force. So these are some of the points related to GST compensation which have been discussed in this particular article. Now let's have a look at some of the questions. Question number 1. Which of the following steps are used for contractionary monetary policy? Now please understand, either the UPSC will use the term contractionary monetary policy or expansionary monetary policy. Whenever they use the term contractionary monetary policy, it basically means a reduction of money supply. Whereas expansionary monetary policy basically means increase in the money supply. Now various tools are available for the monetary policy committee under the monetary policy, such as repo rate, SLR, CRR, OMO, so on and so forth. Using any of these particular tools, if the monetary policy committee aims to increase the money supply in the market, such a monetary policy is called as expansionary monetary policy. If it is vice versa, it will be contractionary monetary policy. Now the question is related to contractionary monetary policy. Let's look at the points here. Increasing the CRR. If RBI or MPC increases CRR, the supply of money in the market is expected to come down. Increasing repo rate. Yes, even when they increase the repo rate, the supply or the money supply in the market is expected to come down. Whereas, if RBI reduces the SLR, the RBI or the MPC expects to increase the money supply in the market. Very recently, this particular decision has been taken to reduce the SLR from 19.5% to 18% with the objective of increasing the money supply in the market. So, point 3 is wrong, point 1, point 2 are correct. Right option will be option B, only 1 and 2. Question number 2, consider the following statements. With introduction of GST, the logistics cost related to manufacturing is expected to come down. Yes. Now, what is the connection between GST and the logistics cost? Please understand, earlier what used to happen is, if a good is manufactured in state X and transferred across border to, let's say, state Y, then further value addition happen and then transferred to another state Z, whenever they would transfer across border or state borders, additional taxes would be levied, which would basically lead to cascading effect. Now with introduction of a GST, this kind of a taxation at the borders has been wiped off. Many of the states have even dismantled the checkpost at their borders, and the cascading effect has been eliminated because of this. Now, as a result of this, it is expected that the logistics cost will come down. So, point 1, correct. Second one, the government has awarded the infrastructure status to logistics sector. Already we have discussed this. Yes, point 2 is correct. So, the right option for question number 2 will be option C. Both the statements are true. Question number 3, consider the following statements about NAA, National Anti-Profiting Authority. Very recently, this authority is in the newspaper. That is the reason I have picked up this particular question. First statement, NAA is chaired by Mr. B.N. Sharma. Yes, he is the chairman of National Anti-Profiting Authority. Second statement, NAA has a sunset clause of 2 years. What do you mean by sunset clause? It basically means once the chairman takes his position or once the authority starts functioning from that particular day, after 2 years, this particular authority will cease to exist automatically. That is the meaning of a sunset clause. For example, let's say hypothetically, the authority starts functioning from 1st Jan 2017, then the authority will cease to exist or will wind up on 31st December 2018. 2-year time period. This is called as a sunset clause. In case of a National Anti-Profiting Authority, yes, it is true, there is a sunset clause of 2 years. So even the second statement is correct. So both the statements are correct. Right option will be option C. Both are true. Question number 4. The GST rate or rates are recommended by 13th FC. We already discussed this. 13th FC was headed by Mr. Vijay Kelkar, who recommended that there should be a single rate of a GST that will be 12%. So the right point will be pointed to 12% and the right option will be option A. Question number 5. Consider the following statements about prompt corrective action. As of now, totally 12 banks under the prompt corrective action. Yes, that's true. Second, Dena Bank is the only private sector bank which is under prompt corrective action. Now, I've already mentioned that 12 banks are under the prompt corrective action, of which 11 are public sector banks and only one is a private sector bank. Now, this particular private sector bank is Dhanalakshmi Bank. It's not Dena Bank, it is Dhanalakshmi Bank. In fact, Dena Bank is a public sector bank which was nationalized back in the year 1969. So, point 2 is wrong. Third, RBI keeps the banks under prompt corrective action if they falter to maintain the appropriate PSL, CAR, NPAs. NPA is correct, capital adequacy ratio is correct. PSL is not part of a guideline under the prompt corrective action. That is, even if you fail to meet PSL alone, you cannot be kept under the prompt corrective action. So basically this point is wrong. So even the third statement is wrong. So the right option will be option A, only one is correct. So these are various multiple choice questions as well as various articles related to economy which appeared in various business related newspapers. Thank you. Have a good day.